Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to go over an example of a losing trade and the importance of managing your downside and keeping your stops tight, and also whether or not your trading plan calls for a contingency exit on different types of outcomes. So this is an end-of-day chart on the Euro-Yen, and had a trade on Tuesday morning on an inside bar. And we could see that the original inside bar breakout trade rose up quite quickly, and you can see in the last couple of months we've had a fairly range bound market, sort of between that 1250 range and the 1570 range. Now I saw the market strongly break out through here from last week's inside bar, and the market immediately came back up, and we had the false pin bar set up when Monday's inside bar gave me a great opportunity to what I thought was going to carry through, possibly on a strong follow-through breakout to possibly retest the high from September. But I also knew that that being the case, regardless, as always, I managed my downside, and I actually left this originally in the opening of the day, and what happened was I saw this pin bar set up on during Tuesday's trading. It actually came off the low and was trading back up around the open around 1510. So I put a limit order in at 1521, 1526, and into the London Open the market did pick up, and I let that trade go and I placed my stop in place. And I came back later and it was trading up around 50, 55, and at that point I decided not to go to break even. I just had accepted the risk involved in that trade, and with most of my end of day trading, I will try and let most of those trades run until the close of the day. And the reason why that is the bulk of my testing and trading is all based on the open and close of those bars being on the New York close. So in order to fully accept the possibilities that your system offers, you have to let these trades play out as they will. So as I hypothesized that this market may reverse into the US session, which it did, and I got up in the morning and I saw that the market had closed down below my entry. Now at this point I saw that this could form a 3-bar fake out reversal pattern, and so I immediately exited that trade with a 22 pip loss. Now what's important about this trade is that, number one, my hypothesis was that this trade should carry through strongly at least to the highs of last month, as it did on the breakout off the lows down here. That's not always the case. Obviously I was looking towards the end of that move. It did encounter strong selling up above that 1535 level, and that's fine. But what's important is that it didn't do as I expected it was trying to do. Now whether or not this trade still reverses and goes back up is another question. I know I'll get another opportunity, but the importance is that I accepted the downside immediately based on that 1-bar risk. But when it didn't do as I had hypothesized, I had to make a decision. And one thing I've learned from Colin Nicholson, Peter Brandt, some of the other great traders, is you need to be ruthless with cutting your stops and getting out of these trades. And obviously that turned out to be a fairly smart move on my part, and I know that even potentially now we may see this market retest the lows. But what I'm looking for are simple setups that I can reproduce, and as you can see, there's been plenty of inside bars in this range trading market and pin bars that have been ideal trade setups in the Monday to Friday setup. So they're not always going to be right. I'll go back to my journal. I'll enter this trade in. What did I learn? What was my contingency? What did I do well? I obviously took a small loss, but my original loss would have been another 60 pips further away. So trade losses are part of trading, traders. If you can recognize this and exit your losing trades as quickly as possible, but you need to get really detailed in your trading plan. And I just thought I would highlight, obviously, there's winning trades, and there's also losers, and a great way to manage losers and make sure that your losers are small and that you're always playing defense. I love that quote, invincibility lies in the defense and the possibility of victory in the attack. So hopefully you got some value out of today's video, traders. Manage the downside, let your winners run, and may the markets go with you. Have a great trading week. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.